Hi, my name is Alex Carlucci. I just did a video on seller concessions. Now I'm going to talk about lender concessions. On my seller concessions video, I did not talk about this. I want to mention it because it's going to come into play here too. When you get seller concessions or lender credits, that means you can only get credited the closing costs and escrows, insurance, underwriting fees. You cannot get your down payment credited to you. So if the purchase price is $200,000, you're putting 5% down, that's $10,000, and the closing costs are $8,000. You cannot ask for $9,000 and have that $1,000 go towards your down payment. So you can only credit the costs that are there. Now, remember, when it comes to the seller's concessions, they can only credit you this much. It's 2% for jumbo, it's 3% for conventional, it's 4% for VA, and it's 6% for FHA and USDA and non-QM. So those are the amount of percentages that a seller can credit you, but they cannot credit you all that for every loan unless it matches up to the closing costs. So you can't, on a $300,000 loan, your closing costs are $10,000, you can't get 6%, which is $18,000, because you only can get $10,000 because that's what the closing costs are. You can't get over that. So keep that in mind, my seller closing costs. Now, the seller says, no, I don't want to give you closing costs. You can get lender credits. Lender credits is where something we do is we're going to give you a higher rate than the going rate. It's not that we're nice to you, we're going to give you a $5,000 credit, and banks don't just do that. What happens is a higher rate is given to you, and it comes with a credit. And each rate has a different credit percentage that changes daily with the rates. It's very, very volatile. So 1/8 of a rate one day maybe a 0.5% credit, and the next day it might only be 0.25% of the loan credit. So, and again, with just like seller's closing cost credits, we can't give you more lender credits than there are closing costs. So we can't credit you down payment. Nobody can credit you down payment at all. So your down payment has to be in your bank. The only thing that you can use to offset your down payment when it comes to cash to close, not to qualify, you always have to have your down payment in the bank, but when it comes to cash to close, some states have a tax proration. What that means is that taxes are paid already for you by the seller, or when the seller lived there last year. Then when the next tax bill is due, you're actually paying for the time that they lived there last year, so the seller has to credit you that time. It's like taxes are paid by you for them later, so they have to give you that credit. Now, it sounds great when you get that tax proration as a credit from the seller at closing to reduce your cash to close, but when you go to sell the property, you're going to have to do the same proration to the buyer. So it's not like it's free money, but it does help you with less cash out of your pocket to close when you're buying the house. So that's the skinny on lender credits and seller credits. So give me a call if you have any questions. My phone number is 630-915-7550. Go to gustanshow.com to watch more blogs on this, and please subscribe to our YouTube channel. Thank you very much.